The Matt Brown Show. This is the Matt Brown Show. Matt Brown Show.
Michael Jordaan, welcome to the Matt Brown Show.
Thank you. It's a privilege.
The privilege, I promise you, is all mine.
I'm looking forward to this.
Cool, me too. So for those of you who don't know, Michael is the former CEO of First National Bank, which was regarded as one of the world's most innovative banks. I'm not sure they still have that title. The world is changing. But what is the headline backstory? Like, who is Michael Jordaan and why should we care?
I'm just actually a very ordinary guy. Kind of nothing special about me. But the one thing I've realized in life is that you can be successful if you surround yourself with people who are better than you. So I've been fortunate to do that in my corporate career. And what I've been doing the last 5 years or so is doing that with small businesses. So essentially, it's backing great individuals or great teams, usually, or preferably when they also have great ideas. But the key thing is not the idea, it's great people. And then it's amazing how successful you can be.
What I find really interesting about your story is that you've come from obviously a very successful corporate background, and now obviously with Montegray, is it fair to say a VC arm, venture capital?
Yeah, that's what I do. So it's startups. I'm fortunate that some of them are probably not in startup mode anymore, but a little bit in scale-up mode. But by and large, they are trying to make a better future, solving problems, but none of them are profitable yet. So I suppose that's where the venture angle comes from.
Totally, exactly. But it's interesting because it's similar to my background because I was mentioning before we were on air about how, I've failed a lot in business and obviously succeeded a couple times as well. And I think it's an interesting perspective that one has when you've been in corporate, you know how that machine works, but also you've been in the startup space and you understand how that works. Do you know what I mean? I mean, if you were to pick one thing, maybe there isn't one thing, maybe it's a set of things. But what would you say in your experience is the kind of key contributing factors or similarities between what makes a corporate tick versus what makes a startup tick? What would you say those things are?
So of course, in one sense, they are completely different. In a corporate, you have massive capital at your disposal. You have huge amount of customers and income and brand. And some of those things you take for granted. I suppose just as you take that monthly paycheck for granted. And all of that is very different in a startup. I mean, for me, when I changed into this office, I couldn't go and ask an IT department to get me a PC or set it up. I had to go around and buy one. And once I had it set up, I realized I didn't have a printer. So I had to walk out again and get a printer. And then after setting it up, I had to go out and buy paper and so on. So it's a completely different do-it-yourself type of attitude. But I suppose the one thing that is constant, and I want to come back to people, is if you surround yourself with great people, whether it's in a corporate or startup or in your personal life, that is the secret to success. So great leadership is most often not about the leader just making all the right decisions. It's in assembling the team and then enabling the best ideas to win and the right decisions to be made. They don't even have to come from you. So that doesn't change regardless of the macro circumstances.
I suppose the one thing I would comment on there is perspective, because if you're in a big corporate and you want to innovate or you want to create a step change in the business, then I think to your point, like finding new people or what I would call new voices is important. Whether you're in, 100 billion rand a year company or whether you're in a 100,000 rand a year company, I think it's that perspective that can get you the thing that you need. In other words, when you're stuck inside the bottle and you can't read the label, it's the perspective that's going to get you out into that new paradigm. What would you say about perspective?
Of course, you're right. New perspectives are really important. The world outside is changing very fast. And if you as a business, be it small or large, can't keep up with that rate of change, you're falling behind. And the bigger a business gets, the more difficult it often is, just because there's inherent bureaucracy or processes or procedures to be followed. So new perspectives are critically important, but perspectives aren't adequate. That's something you need, but then you need to have that ability to implement or execute. And that's always difficult in life. It can be hard in a business because you have to jump through so many hoops and get so many approvals, and sometimes things are in silos, and sometimes there's politics, etc. So my heroes in the corporate world have always been the people who can navigate that bureaucracy and despite that still get things done. So I nearly want to say more important than just a new perspective is that ability to get things done. And that too is generic. That too is applicable in the startup world. I think where startups have the advantages, you can make the decisions quicker, you can be more agile, and can be smaller. You can also admit your mistakes quicker without all the politics and kind of move on. But that ability to make things happen is equally tough and equally important in the startup world.
Decision making, right? And I would say the thing that's contributed to all my business failures has been poor decision making, because either you don't have the right information, the perspective, or the right team, or the right product, or whatever the reason is something there that you've made a poor decision based on, right? What have you learned about yourself when it comes to making decisions that can ultimately, impact a massive company like First National Bank back when you were there, versus when you're now looking long term and you're saying startups like, I don't know, not that it's in your portfolio, but Solar City, for instance, or something like that that's blockchain based or whatever it might be. How do you approach decision making? Like, is it an internal thing that you do? Do you triangulate between 3 different people to get to the truth? How do you approach decision making?
So I'd like to highlight 2 aspects of decision making. The first one is that you should know as much as possible about the topic, and you should try and know more than any of your competitors. And whether that is through reading, and everything's available on the internet now, or talking to people that know about this, often talking to people outside your normal sphere, kind of experts on it. So just know more about the topic, because the more you know, the more likely you are to make the correct decision. So that's the first part of it. The second bit, which I think is not stressed enough, is the ability to change your mind if new information should come onto the table. When I grew up, I kind of thought that the people who are right more often are the people who have studied something, learned everything about it, and kind of came up with their point of view. But as I grow older in life, I realized the ability to change your mind is probably far more important. I think there's a saying about strong views weakly held. That's what you should be. So don't be afraid to change your decision if new things come to the table and you have to do so. So even if you're mid-implementation and it's highly uncomfortable to say the decision I used to make, now needs to be changed, but have that flexibility of changing your point of view. I once heard this quote, I don't know if he even wrote it down, but somebody said of Malcolm Gladwell that he said, if you still believe what you believed 10 years ago, you're quite likely a fossil. And if you truly examine your life and you feel that you're still believing all the same things you did some time ago, I would put it, to that person that maybe they're not reading enough, or maybe they're not exposing themselves to other views than their own. So make decisions based on the best information possibly available, but always be flexible, thinking that you may be wrong.
Yeah, it's that saying. I love quotes. I get a lot of quotes from doing these interviews, but one is, the smart man learns something new every day, but the wise man unlearns something new every day. To get to the truth, because I think that's what it's about. We're all trying to seek the truth in whatever it is that we're doing individually, but equally also in business. It's hard to get to the truth. I think it's way harder than it ever was before to get to the truth. What is your advice to an entrepreneur who's watching us and listening to us right now about finding the truth in what you do as a person?
Finding the truth in what you do. Are you talking more about purpose?
Purpose, yeah. Purpose and passion. Are those like defining qualities of a successful entrepreneur in your view?
So I suppose the nice thing about purpose is that there's a young generation out there that is far more driven by purpose than the old generation. It's said that about half the people on Earth today are under 30 years of age, and things like purpose and sustainability are far more important to them. So I think that's pretty cool. It means that you have a better reason to get out of bed in the mornings. It means that you're more fulfilled by what you do, and it's not just about the money. And I think that for me would be the criteria also of successful entrepreneurs, that they are not in the first instance motivated just by material things. In the first instance, they are motivated by solving a problem, by the true passion of saying, I know a better way of doing things, a better way of doing things than the way the world is currently doing it. And if I do it in this way, the world will also be a little bit better. And if you do that well enough, the money and all the other things will come naturally.
Okay, let's talk about a subject that I've been covering quite a lot recently, and many of my following will know, is blockchain. And obviously, you know where I'm going to go with this, right? I guess you have an idea.
I do.
So, I mean, I know a lot of the guys that sit on what's the consortium that are banks that are building their own blockchain?
It's the R3 consortium.
Yeah, with Fazam it's pretty interesting.
Yes, well, Fazam recently resigned from that
Yes,
consortium.
geez, word travels fast there.
Yes.
I knew before anyone else, even you, by the way. But let's talk about blockchain. Obviously, this is about the decentralization of trust, and obviously, this it threatens, I would say, to use a word loosely. Whether it does or not, it's open for debate. But the blockchain promises so much from a reimagining of banking and the financial inclusion of the poor, universal basic income, all of these concepts, prior to the blockchain, prior to 2008, prior to even 2 years ago, weren't terms that were even relevant to a financial community or an emerging continent like Africa. I mean, you put out that tweet the other day, and that's actually how I was here. Remember, you said, what was it? 8 billion people are going to be connected to the internet.
That's right. In a couple of years' time.
So that represents massive inclusion, right, through connectivity. And if you have a blockchain-based financial services type play like Bank Zero, what does the blockchain promise in your view? Like understanding financial services, traditional financial services. And I know that you're launching something called Bank Zero. And is it blockchain? Is it not blockchain? Like, what is the blockchain promise?
All right. So Bank Zero, which we will hopefully launch towards the end of this year, towards the end of 2018, is going to do lots of new things. It's going to be a mobile bank with a card. It's going to be attacking bank fees in South Africa, but it won't initially be built on blockchain. We are busy integrating with the South African payment system. It's sophisticated, it's well running. So we think we can bring lots and lots of benefits to customers in this instance without blockchain. But obviously, we remain open to all the possibilities it has in future, and I think particularly in terms of foreign exchange, which is quite a difficult transaction, quite expensive. That would likely be the first application of blockchain in banking in South Africa. But in a broader context, blockchain is revolutionary. It could in time be bigger than the internet. In other words, the impact it would have in the world could be bigger than the internet, even if it is built on kind of internet type of technology. And the whole concept there of not having to deal through centralized intermediaries is the thing that excites me the most. So it's not just banking, it could be anything from property transfers to, the way that people insure themselves to a whole host of applications. So the way I look at it, though, is to say that the mere existence of an alternative to using a centralized intermediary is also not always adequate, particularly if something is working fine right now. People don't change their behaviors that easily. So let's just take the property transfer system in South Africa. It would take a concerted effort, probably by the authorities, to say we're going to put title deeds on blockchain before it works. So the business models that are built on blockchain are not yet that well developed. The winners are also not that obvious. I'm not talking about the people who speculate on the currencies. I'm talking about true businesses built on the blockchain. It would be like identifying the potential of, let's say, mobile phones 15 years ago, but you still didn't know 15 years ago that Apple would be the one that wins. And so it is in the blockchain world. It has massive, massive potential, but not clear which the use cases, particularly in an emerging market like South Africa, is that are really going to do well. My interest in the blockchain specifically comes from banking and from its role as a currency. So I like the idea that you can make transfers easily to other people, but also most importantly for free. And I think it re-emphasizes another thing in the world, which is that the ruling price of our era is likely to be free for all electronic things, for all dematerialized things. And that in itself, I think, does ultimately threaten the banking system as we know it, because right now they only have the power to charge you fees because you are forced to go through an intermediary. And when all of that is decentralized, I think the power of making free transfers is inherently a very powerful thing.
Yeah. Are there banks some people would say in the media, like the banks are threatened. It's this blockchain thing, the technology, not the speculation on price movements. I think they're fundamentally different things. But blockchain as a technology is going to threaten the existence of banks, period. Would you agree, yes or no?
In concept, of course it does, because it obviates the needs for central intermediary. You could argue it even threatens central banks, who are the current issuers of currency, because now currency is issued in a completely different way. It can either be mined or, others just release all the currency straight up front. And it has the particular benefit that it's global. At the same time, the proportion of cryptocurrencies as a percentage of overall currencies in the world is very small. And if you really just want to walk across the street and buy something, it's still not there. So it requires acceptance and broad acceptance. Now, in the internet world, we speak of this phenomenon of the winner takes all. So Facebook has become the winner in social media, at least in the Western world. Now, you could come up with a better Facebook, better functionality, also make it free, promise no advertising, but you won't move there because there's no one else there. Your mates aren't there. So you're going to hang on to the winner. Now, that also happens with currencies and with payment systems. So you have to find a very specific use case where somebody said, I will change from my local national currency to another currency, and I will start really using it for the purposes that it's intended to. So my point I'm just making is you can absolutely, completely, theoretically see how it can threaten all of this, but I think what it's up against is a very powerful network effect. And that network effect is the one that the banks and the current payment systems already have. So it will take time. When we do reach a tipping point, then you can expect all these things to happen quite quickly. So it's the same way people go bankrupt and reverse, but it's slowly, and then very suddenly.
I think there's a revolution in funding happening, interestingly. It's actually, I'm doing a talk to a large FMCG brand and a health brand tomorrow, funnily enough, all about this blockchain thing. And one of the slides I have in there is about ICOs. So last year in 2017, over $6 billion was raised through alternative funding vehicles. It's what I used to call what ICO/token sales are. Let's stick with token sales. No one likes ICOs, apparently, although they're one and the same thing. So this is a revolution of funding. And to your point around use cases, there's a number of different types of tokens. You've got utility tokens and then security tokens. And I think, just in my observations, I think we're seeing a shift away from utility towards actual security. And again, this is interesting from a banking perspective. So what are your views on how value is fundamentally going to change through looking at it with the blockchain hat on? How do you see value fundamentally being shifted or changed from both pick a sector, from a corporate/entrepreneur perspective? How's value going to change?
So if you go back in history and you look at the creation of something like the corporation, something that said you create a legal entity and it has its own limited liability. That was one of the major things that led to the development of economies and trade and so on, that it wasn't just always one individual behind it, but that people could come together and create something that they invented, which is the corporation. So it had a massive impact. Now, tokens could have exactly the same type of thing. I mean, we've until now had basic categories like bonds, which give you interest rates, and equity, which give you a share of the profit. But why could you not have something in the middle and something completely in between? And this is where all these tokens become interesting, and where blockchain makes them more interesting is that you can now trade them without needing a centralized exchange. So again, conceptually, I think it's a very interesting use case and something that could take the economy forward. At the same time, sitting here today, March 2018, I see a lot of them that are just a mad rush to monetize somewhat insatiable appetite out of people to speculate. So I would just say that there are good ones and there are bad ones. And to anyone out there, before you just buy a token or an ICO on any company, do your own work, do your own research, see what that gives you access to. Because I unfortunately think there are, and I say this with reservation and caution, there are more bad ones than good ones out there, certainly the ones that I've seen. So be careful. Some of them will be wildly successful and others are going to lose their pants.
I think there's so much scamminess in terms of the narrative. BitConnect, that guy on stage at that conference, I'll put the video up in the show notes, but basically jumps on stage and it's like BitConnect, and the guy's like going crazy, and people are like, woo, and the whole thing just blew up, and that was a $2 billion play. EOS is another one. They're also a $2 billion valuation token, and it was literally in the Wall Street Journal. It was like, this EOS will produce software. It's designed to produce software, but it won't ever sell any. Do you know what I mean? It's like, but where's the value then? And that's the interesting thing, because I think we're trying to find, for me, I think there's a fragmentation of value that's coming through the blockchain. And people are trying to seek out where this value is going to sit. And we've been playing around with it. It's like, I like to use the saying, like the internet's had sex and had the blockchain and Bitcoin, and we're still trying to work out what the hell to do with it. Because it's like 1994 HTML all over again. We haven't built Amazon on top of the blockchain. It's coming, but it's not there yet. Do you know what I mean? What would you say there?
So exactly right. I think we spoke about it earlier. It's still unclear who the winners are going to be. We've created a foundational infrastructure, but it may be that it's not the current cryptocurrencies. It may not even be blockchain. It could be Tangle. I mean, there are new versions of the blockchain coming up. For me, what is really interesting is the way that tech is moving faster and faster, and humanity, in its broad definition, is actually not keeping pace. What I mean with that is that tech is, as we know, subject to Moore's law. Its capacity doubles roughly every 2 years or so. And there's some wild forecast of where that could take us in terms of artificial intelligence and robotics, etc. But mankind and our ability to understand what's happening in the world and our basic emotions are still ruling us. And so what you're talking about, these ICOs and the tokens, that's good old fear and greed, the basic things that we had 2,000 years ago, and they're still with us. So I am quite concerned by the fact that humanity is not moving as fast in terms of its understanding, intellectual and emotive, of how fast this world around us is changing.
Yeah, it's FUD and FOMO. So if you're trading, it's the fear of missing out on the new token sale, whether that might be a Telegram launch or whatever the case might be. And then from a FUD perspective, while it's still relevant in the trading space, FUD's almost like, what is the banking of the system of the future going to look like? What is Know Your Customer or KYC going to be like in the future or in the next, and that's all FUD. And when you put those two things together, it's just, I just see this massive status quo of fear. Like, we fear the things that we don't know, that we fear the things that we can't control. We fear the not having the right information to make the right decisions as executives and as entrepreneurs, business owners, and more importantly, to your point, as people. I mean, how do you approach fear? And, looking at this exponentially changing world, like, what is your advice around fear? Like, what should we do? What shouldn't we do?
So first of all, I think you're completely right that FUD and FOMO are the fear and greed of our time. That's, the modern version, but it's going straight back to basic behavioral biases, basic emotional bents that we as human beings have had. So, okay, how do I think about fear? I think one should embrace fear and take more risks. Okay, now again, that doesn't mean stupid risks, but I think the quality of one's life is directly correlated with the amount of risks that you're willing to take. So I'd much rather involve myself with small startups, which in theory are high risk. But what I like about them is whether they succeed or not will depend on the individual and the team and the idea and the implementation track record. And I can even assist a bit there. And they're completely independent on whether, GDP growth collapses or goes up another 5%. So these things are controllable in your universe. So it's one of those bizarre things where it seems to be more risky. People are more afraid of putting their money in startups. But for me, I think it's the other way around, is by embracing that fear, but doing it in a smart way, you will over time improve the quality of, in this case, financial performance.
Just to stay on fear for a bit, how should you, and when you say like embrace fear, like, how does one do that? I mean, is it just simply to stop resisting and acknowledging the fact that you're fearful and acting and pushing through despite that, acknowledgement? Like, when you say, like, how do we embrace fear so that you can do whatever you want to do? Like, how do we embrace it? Like, are there like meditation practices that you do, or?
Look, I say this because I truly believe it, that one should embrace fear. That by no means says I'm good at it. There are many girls out there that I would have loved to have talked to, but I just, was too afraid. So I didn't have the self-confidence to go and do it. There were investments out there that I should have taken. There are life decisions that, I should have done. So I'm really not sitting here saying I'm that good at it in all instances, but I do know that it's true that you should say yes more often, and that you should worry far less about failure, which I think, unfortunately, is the thing that we do in South Africa. We're so worried about what other people think about us. The nice thing about embracing fear, though, is that you do get rewarded for it in the long term. So I suppose what you must just do is, kind of focus on the end goal, focus on those experiences, focus on the rewards, and then fear becomes worthwhile. Just like it's tough to go to the gym or to go for a long run, but you do feel much better for the whole day afterwards. So rather have the pain up front and the reward for it the other way around. Unfortunately, most of mankind, most of humanity, we kind of want to do it the other way around. You want to have a good time now, even if you pay for it tomorrow. You'll have too much wine tonight, and tomorrow you'll have the hangover. So exercise is exactly the other way around. Pain first, then a good time, and the same with kind of the financial risk if you take it smartly.
So let's talk about risk a bit more. I mean, Richard Branson is famous for saying, like, for instance, how do you own 300 different businesses? Do you know what I mean? Tony Robbins has 36 different big businesses. These are billionaires through and through. And their whole business, their whole mantra is, not their entire mantra, but a large portion of it, the narrative, is about risk. So Richard Branson will say something like, when I look to invest or make a big decision, put 100 million into a company, whatever that might be. For him, it's probably a bit more. But it's all about, for him, protecting the downside. Is that an approach that you would agree with?
Well, I come from a banking background where half your balance sheet is loans. And in the credit or banking business, protecting your downside is incredibly important, because your margins are 1 or 2 or 3%, which means you can only make 1 or 2 or 3 out of 100 errors if the loan is unsecured, and that wipes out all the profit. So banking is all about protecting the downside. I would argue venture capital is the other way around. It's all about focusing on the winners. And it's understanding you're going to have many failures. The rule of thumb is, out of kind of 10 venture capital investments, 3 or 4, 5 are not even going to make it. 2 or 3 will be okay. And if you're lucky, you're going to have 2, maybe 3 that outperform so completely that, it pays for the rest of the portfolio. So I don't think it's about the downside, even though that is how most of us are programmed. It really is about looking at the upside. Having said that, you said Branson has hundreds of companies. I didn't know that. But if he does that, he diversifies. And that is actually quite a smart risk management technique. Now, clearly, I'm in a privileged position as a portfolio investor that I can spread my risk like that. I think we have to acknowledge that most entrepreneurs out there don't have that privilege. They have one business, and they've got to make that one business work. Failure is tough. You want to avoid it at all costs. However, my message out there to any entrepreneur there would be that if you gave it your all and it didn't work, I think you are far richer as a person, and you are probably in far better shape to try the next one, and you should. Don't give up.
Failure is such a great point of departure here, because I think in South African culture, failure is just not sexy. I don't know whether it's because when the Springboks lose, we'll go into depression or something to that effect. I mean, why? And I love failure. Like, for me, like, if I haven't failed today, like the fact that this isn't being broadcast like right now, because of whatever the reasoning was, that for me is a failure. And so in any day, if I haven't failed, like, I haven't had a good day. But yet, when I speak to entrepreneurs, it's like failure is just not cool. It's the thing that you sweep under the carpet. It's not the thing that you talk about, because we just want to talk about Porsches and Ferraris and how we landed that big deal. Like, why isn't failure sexy? And how should entrepreneurs think about failure?
I think I'm going to answer it in a little bit more nuanced. I don't think failure is sexy, and I don't think failure is cool. I think failure hurts, and you want to avoid it at all costs. So I don't think we should make failure in itself cool. However, when people fail, and they did so valiantly, and they did so cleverly, and they did so with their character intact, you learn so much out of it that it can actually be a positive experience. So it's just a slightly more nuanced wording of failure. And I think where we are wrong is then in bringing that judgment to the failure. So if someone has failed and has gone through all those pain experiences that I highlighted already, you know, we as society and other people just shouldn't criticize and judge or think that that is a good indicator of future performance. It could be that if that person learnt about it, it's actually a much better indicator that they're going to do well in future because they may not be repeating those same type of mistakes. So I'm saying failure isn't cool, but our approach to that still has been too negative, particularly in judging people from the outside. Failing, if you're a youngster and you fail at a startup 2 years out of varsity, I promise you that you've learned more in those 2 years than any of your colleagues who got a paying job and now suddenly is a junior in some other big firm, wherever it is in the world. You've grown 10 times more as an individual.
That's such a great point. I think because success doesn't really teach you too much. Do you know what I mean? It's like, yay, I've succeeded. Do you know what I'm saying?
No, that's exactly right. I mean, in fact, there's this concept of the narrative fallacy that if you tell the stories of somebody who's become very successful, you kind of look at all the points in their life and it kind of looks like every step was logical and would inevitably have led to success. And we like those type of stories. And then even we as individuals underestimate the role of luck in that journey. You know, if most successful people are truly honest, they will tell you that there were a couple of key points in the entire journey where luck played an incredibly important role. So one doesn't tend to learn that much from success because you even tell yourself the story. This narrative fallacy is even self-reinforcing that you say, I got there because I worked so hard and because of the sacrifices I made and the risks I took, etc. And you need to be careful to also say that there may have been a lot of luck involved.
I have had that discussion quite a few times on the show about luck because it's almost as if you just stay in the game long enough, at some point, something's going to happen. Do you know what I mean? And it's almost like, I know it's very reductionist, but it's almost like your job as a startup founder is to just stay in the game for as long as possible. And even when like you're in the trenches taking grenades and you feel like giving up and people are telling you like your business is going to fail, like you just stay the course, you know. But this is an interesting dilemma that I've had personally, and I'm sure that you'll be able to relate to, is that when you're in the trenches taking grenades and you feel like quitting, like, and the world feels like it's stacked against you and you feel like your life's going to end, right? Not just your business, like you feel like all consuming doubt, FUD. And then you have that choice of whether to either pivot your business or to quit. What is your advice to that person?
Gee, this is such a tough topic because generic answers aren't always helpful. I would definitely agree with the concept that endurance is incredibly important, just like it is in sport. You know, you've got to go into a certain very uncomfortable level for your body or for your business, and you've got to be able to endure. That's one way that makes you better than the competition out there. And most of the startups just take longer than people think. You know, you started in a very optimistic, very naive way, and then at some stage in your journey, it's going to be really dark. You're going to be in the depths of despair and so on. And that's where you sometimes need to have the endurance to pull through. At the same time, though, you need to have the flexibility to sometimes admit to yourself that this is wrong, that either the idea or the execution or the pricing or the product or the team members are wrong. And then you need to be flexible enough to make those type of decisions. That's what makes a generic answer quite difficult. Sometimes you've got to pivot. Sometimes you've got to close the company. You know, there are also a lot of zombie companies out there that also shouldn't have the existence, you know, rather kind of pack it up and start again. So it's a strange mixture of sometimes saying, you know, I'm going to continue doing this come what may, but at the same time having that flexibility just to be realistic about the prospects of the business.
Yeah, you got to have some sense. No one's going to help you if you're stupid. Do you know what I mean? Let's be honest. Like, you have to have some sense. The other thing that I've learned, and just to tell me if you agree or not, is that when you're there, it's like no spreadsheets met the reality of the markets, especially in startups. Do you know what I mean? It's like, I love these accelerators and incubators where they go, please give me your 3 to 5 year projections. Like, what that for me is almost like, I'm not going to work with you because you're either just trying to see whether I can work out what those might be, but they have no value because fundamentally it's like, I mean, I've met with tons of VCs, just as I mentioned, met with Kiet for lunch on Monday. from Knife Capital, and it was a similar thing. It's like, I know you guys have different criteria, like you have to have some revenue and all that kind of cool stuff. But as for me, at the point I'm trying to make here is don't get stuck on the numbers. Like if you get in market, because unless you're in market getting feedback from the person or the customers or the community that you're trying to serve, there's no way that you're going to get to product market fit because you're not in market. So you know what I mean? It's a chicken before the egg thing. I mean, what would you say to that?
See, I remember when I came up with my first business plan, this was in a corporate, and I was very confident to the figures, and someone in the meeting that had to evaluate, I said the same thing. He said, look, you're never going to even reach your low case scenario. And I remember at the time I was like a little bit offended by this. I thought, we've put a lot of thought into this. We're very confident of this. I'll show you. As it turned out, we did underperform. Eventually, the business did very, very well. But, it underperformed initially, our most conservative estimations of it. And now I'm on the other side of the table. I get to look at a lot of businesses. And unfortunately, the observation is still true. If people just start off with nothing, what they can put in that Excel spreadsheet is very patient. And it doesn't come through. I have to then say that how individuals then react, when reality is not the same as their expectation. That is like the real test of an entrepreneur. I also think that there's value in doing the Excel spreadsheets, because it's a mental exercise where you apply your assumptions, and the right ones then can be adapted as you go along. So I certainly don't think the answer is to throw away all spreadsheets.
No.
It certainly is just to have them, and then, as I say, then as life changes, then kind of adapt them and see if you still have good business prospects.
Is the business plan dead? Yes or no?
The business plan is, again, valuable in terms of having to write down exactly what your idea is, how you're going to implement it, who's going to do it, and obviously it incorporates financial models. I dare say, though, that when the right investors make their decisions, obviously they've read the business plan and they've asked lots of questions about it and they've interrogated it, but the right decisions ultimately aren't made based on the business plan, but on the individuals that are presenting it and are going to implement it. I had this great quote, I don't know who came up with it, that says, in the end, you back surfers, not the waves. So it's about the individual and how they're going to ride that wave rather than kind of knowing everything about the wave.
The jockey and the horse.
Yeah, there we go. But I think surfer and wave just sounds cooler.
It's much cooler. I'm switching over. Cool. Just a couple more questions for you. Let's talk about the surfer. What do you look for in a surfer? Let's just say I was here. I've now given you my 3 to 5 year forecast. Probably just 12 months in my case, or whatever the story is. I mean, if you were looking at me as a potential startup to invest in, what would you be looking for in terms of my personality, character traits? Like, what is it in the surfer that you look for?
So I'm going to give you a couple of answers, but before that, kind of a caution, and that is, some of these things can be gamed. So if you say, I'm looking for this and this and this, then somebody will kind of say, okay, that's how I've got to be when I meet the type of person. So, you're really looking for these things kind of in an authentic way, where people really are like that. So first of all, where I've never invested, and I think, again, some of the top venture capital investors in the world haven't invested, is somebody comes and pitches in a suit. Suits are that's a no-no, okay? The second one is a business where people have put a high salary in for themselves. Now, the metrics here are interesting. It doesn't mean that if you put in a low salary, you will succeed with a small business, but it's nearly universal that if you start a business and you put in very high costs up front, you won't make it. Okay, so it's kind of like a counter indicator. So don't come in suits and don't start a business plan trying to live the high life of it. If anything, there's something to be said for frugality and leanness. So the most successful entrepreneurs I find are a little bit rebellious, okay, and they don't accept the world as they see it, and they found something in the world that frustrates them, nearly irritates them so much that they came up with a solution towards it, and they're now hell-bent on proving that the way that they're going to solve this problem is the right way of solving it. They're typically well-read, not just in their own topic. They live in the future, so they know a little bit about all the other things that are happening. So somebody may be an expert on solar, but ask them about self-driving cars or artificial intelligence, and they will surprise you with their answers because they live in the future and they read a lot about it. They need to have the ability to sell, and the sell is multifaceted. It's kind of sell to the investor because they need funds, sell to customers because they need to sell their products, but actually also sell to get the right people to join them. They have to persuade people to say, look, join this team. It's very uncertain, and that's a very important, shall we call it, the interpersonal skill, to be persuasive enough that great people want to come and join you. So, of course, there are many others. People need to have endurance. They need to have a track record of implementation. That helps a hell of a lot. But it's that thing of somebody who thinks they can change the universe just a little bit, make the world just a little bit better, is a little bit rebellious, which I don't mind at all. That sometimes makes them just a little bit wacky. They're not kind of the ordinary type of person. And the nice thing is that it's fun working with people like that. You get energy from people who are just like a little bit rebellious and want to prove a point.
Great stuff. Last question for you. Why do you do what you do? Like you mentioned getting out of bed in the morning. Like what's the reason that you get out of bed in the morning?
So I didn't formalize this well enough when I started. When after 3 years I looked back at the investments that I'd made, I realized that all of them are small initial attempts to solve some of the bigger problems that I see in South Africa. So unemployment, for example, I think is a big problem. So I've got an investment in a coding academy, Codex, that takes high potential, underprivileged kids, teaches them for a year, and then they get white-collar jobs. Now, it's going to be 50 this year, but there's no reason it can't be 500 or 5,000. That's my attempt at solving education. Or I think we're burning fossil fuels. So I'm involved in Bright Black, which is a solar company and installing many megawatts of solar power. I think education is very, very bad in South Africa. We regularly come last in all these global type of rankings. So I've got a couple of educational investments from Snaplify, which provides textbooks in electronic format so they don't get lost on the road to a Montessori type of school. So there we go. There's education. And so one by one, data costs are too high. Rain will, pretty soon launch its mobile offering to the market. We're going to make data affordable and fast and not have any of these funny pricing practices. So one by one, each of these solve a big problem in South Africa. Now, I get a kick out of that. I happen to believe that startups are the best way of solving problems in the world. That doesn't mean governments can't do a lot. They can. Doesn't mean big corporates can't do a lot. Of course they can. But they have other priorities as well. Big corporations, that half-yearly report to investors is still the most important thing. But if you're a startup and you're truly obsessed with solving it, you can grow much bigger pretty quickly and you can solve those problems. So what gets me excited is working with interesting people who also see these problems, find out or think that they have a way of solving it. And then if I can back those people and in the process make the world a little bit better, that gets me up in the mornings.
Michael Jordaan, thank you for being on the Matt Brown Show.
Listen to the Matt Brown Show. This is the Matt Brown Show.